Hello there, I'm Shamla. Welcome to Bite-Sized Corporate Reporting Lecture Series. Here I will take you through the underlying principles of the conceptual framework of financial reporting and various accounting standards issued by the IASB. Question: where do we start? For me, that would be the accounting equation of assets equal the sum of liabilities and equity. Assets, liabilities, and equity are the three broad headings in the statement of financial position, with total assets equal the sum of total liabilities and equity. So, how do we keep this accounting equation in balance? To keep the accounting equation in balance, we adopt a double-entry bookkeeping system to record transactions. To ensure the accounting equation remains in balance, there is an equal debit and credit amount, the Duality Concept. If an entity's assets increase, we shall debit, and to keep the accounting equation in balance, we shall credit to record increases in liabilities and equity. Looking at this example, an entity has purchased a machinery from ABC Limited on credit. Thus, the effect on the accounting equation would be as follows. The purchase of machinery increases the assets of the entity by $2,000, and as there is an amount due to ABC Limited, liabilities of the entity increases by the same amount. Now, how do we record the transaction? There will be an equal debit and credit entry of $2,000. The increase in asset is recognized by debiting machinery, and the increase in liabilities is recognized by crediting payables. Taking it a step further, let's look at what the entry would be if on 31st December the entity settles the outstanding due to ABC Limited. Now the liabilities of the entity is decreasing. Thus we debit payables, and the outflow of cash, a decrease in entity's assets, is recognized by crediting the bank. This brings us to the next important question. How do we decide if an item should be recognized as an asset, liability, or equity? This will be covered in my next lecture series as I go through the underlying principles of the conceptual framework of financial reporting. Thank you and see you in my next lecture series.